What's going on, everyone? Today, 69% of the S&P 500 fell down in the red. Tesla stock had its worst day in 5 years. The market is nuking. Trump's been telling everyone not to watch the stock market. And on this day, around 5 years ago, we were in the middle of the COVID crash. In today's video, we're going to talk about what is moving the market right now, what you need to know, and where the action is at. At the same time, we have a potential government shutdown on the horizon. We know we have a crazy week ahead of us. So Tom, let's get right to it. We have a lot to cover today.
Yeah, the market has been pretty volatile lately where we'll see a bunch of up and down price action. Today, we definitely saw the market falling off in a pretty crazy way without a real recovery. We did see it at the end of the day. There was a slight recovery with the SPY, which was nice, but just barely got back to hold that 560 level. And of course, we'll talk about SPY a lot more. But Mike, right now, what is going on in the stock market? We are seeing some insane selling pressure, and that heat map today is one of the bloodier ones that I've seen in a long time. Of course, it's highlighted by Tesla down 15%. I saw this was their worst day since 2020, so that's a pretty bad thing to hear. And this heat map is so brutal. I don't think that we've seen one this red in quite a long time. There was a slight green spot here with some of the energy stocks, but at the end of the day, these tech stocks that really power the market, like Nvidia, being down 5% is no joke.
No doubt. And when you have big tech powerhouses like Nvidia, Apple, Tesla, and all of these other ones, falling like they are, they just like wipe away all hope for the market because, the market is so tech heavy. And one of the stocks that has been like in the spotlight right now is Tesla. You mentioned that they're down 15% on the day. They wiped out all of their post-election gains, and basically they lost $800 billion in market cap since their highs from December 17th. What is going on here, and why is everyone freaking out?
Yeah, and it's a real conversation that I think Tesla shareholders are starting to get a little bit worried about. And whenever we go to Tesla, we go to the daily. Whenever the election happened, it was amazing. Tesla enjoyed this amazing run. It gapped up and pretty much ran up like 76% there. It was an insane run to the upside off that election. I think traders are starting to get a little bit upset with what Elon Musk is doing, and this might make some people mad depending on which side of the aisle you're on, but of course he's doing a lot of political stuff, and that could end up impacting what traders think about the stock. At the same time, he's not really focusing too much on Tesla, right? He's so much into this government stuff, and he's into SpaceX and going to Mars and all that. I feel like Tesla has been kind of pushed to the back seat for Elon.
Yeah, and I think that's how a lot of people feel as well, just by looking at some of this price action. So, with that being said, Tom, the stock is just getting smoked. What are the next levels to watch in both directions with this one? Because it is looking nasty.
Yeah, there's a pretty big support on the daily that I'm eyeing up. Tesla's actually filling a major gap down to around $215 to $220. I'm giving like a $5 range here because that's how crazy that gap and just Tesla's price action has been. But right around $215 to $220, that gap fill is huge. And even just under there, I really like $205 and then $200. $200 is going to be a major psychological level coming up in the short term. I know it seems like, wow, how could Tesla get to $200 in a couple days, right? Well, it fell down like 30 points today, so it can definitely have those those wild type of swings. But $200 will be crucial. If we do start to see a recovery, there are some resistances like $250 in the short term, but I really like this next area of resistance around $270. I think that'll be a pretty critical level. Just keep in mind, there's a lot of volatility here. This stock has some crazy swings.
All right, sounds good. So we know Tesla is definitely one of the main leaders charging the market lower right now. But when we look at everything in general, there wasn't too much big tariff news today or any specific pieces of the news that truly drove today's price action. So in your own words, why is the market falling like it is?
Yeah, there's a lot to be asked here, Mike, and a lot of traders are really confused right now. And really, I mean, we're even seeing the president saying that you can't even watch the stock market, right? We're seeing Trump come out with all these things saying that, what he's doing could have some short-term pain, as the article says here. And short-term pain is definitely not what people want to hear. And I think that this is something that isn't overly unexpected either. Like whenever Trump was elected, even right here on our channel, Mike, we sat here and told people pretty much that, hey, this is Trump's first year of this new administration or his new term. There can be a lot going on with tariffs and stuff, and we're starting to see that play out a little bit. And I think traders are just de-risking in general, and it makes sense. There's been so much good stock market gains over the past few years. Like if you were somebody that bought in, let's just say the middle of 2023, you're currently up 30% on the SPY. You're like, well, hey, if it falls down to 500, I'm taking some profits now, right? And I really think that that's what it comes down to, Mike, is that overall supply and demand dynamic in the stock market, where it's just simply traders are seeing some fear right now, and we've enjoyed some good gains, and it's just simple profit taking.
Yeah, and a lot of it has to do with the good old-fashioned human psychology as well. When you have stock prices falling rapidly and fear spreading, it's just like a giant snowball effect where it brings in even more profit-taking, even more short-selling, even more fear, and it's just like a continuous like self-reinforcing feedback loop, and I think that is playing a major influence right now. And of course, when you have stocks falling like the way they are, you have people starting to sell investments and sell holdings that who basically never would have otherwise considered selling before. So there's a lot of that as well, and even some margin calls for the people who are over leveraged. But either way, it just brings on more and more bearishness. As we've mentioned multiple times, there are ticker symbols out there like SPXS, UVXY, and many others that actually rise when the market's falling. So of course, keep a close eye on these ticker symbols, and of course, keep your mind open to bearish positions, whether it be puts, short positions, inverse ETFs like we mentioned. Being willing to adapt is the best thing anyone can do in this type of market, not only because it's crazier than we've seen at any point over these past few months, but also because we are seeing bigger, stronger movement right now than we've seen anytime recently, and the direction is changing by the day, and it often changes direction in the middle of the day.
Yeah, and it almost tried to do that at the end of the day today. It tried to get that little recovery move coming back in, and I wouldn't even be surprised if we woke up tomorrow and the market tried to rip up into resistance, and then, we closed the day down in the red, right? That's kind of how things have been going lately. Very back and forth here, Mike, and I know that there was some updates with the government shutdown today, so I figured that I would let you guys in on some of that. They are still trying to get this vote done. It looks like it's going to get through the House pretty easily, but they're going to need 7 Democrats to back it in the Senate. So we might not see it totally get passed. There might be some edits or something like some negotiations later in the week. We'll have to keep our eyes on that situation, but it's just another thing that scares more traders in the short term, Mike.
Seriously. So I guess looking at what's truly most important, Tom, as we head back over to SPY, of course, we have the government shutdown news as a key risk. We have all the tariff stuff as a key risk and all the other craziness going on. But looking at the actual levels right now for SPY, what are the key points to pay attention to the downside, the upside, and what are you seeing with the charts?
Yeah, with the SPY right here, there are a couple levels coming up that I think are going to be very, very critical. And I'm just going to start off with some of the main ones. I go back on a 4-hour chart to find a lot of these levels here, because the SPY has not been here since the end of last year, which is pretty insane to say. I really like 550 coming up as a major support. That is going to be critical. The low of day today, right around 555, I also like that as a pretty good support. As far as resistance, the SPY did break below a lot of key supports today, and now those are going to act as resistances. 560, 565, and 570 overhead are my favorites. I also really like 572 up here, marked in red. That was the bottom of that little range last week that the SPY got really choppy between. So I think that 572 to 570 area will be critical overhead, but that's what I'm watching for, Mike. Those are the big levels. We've been seeing SPY react off of a lot of these levels in the short term, and hopefully we keep seeing a lot of this good intraday PA, like support breakdowns and stuff. It can create a lot of good buying opportunities. And when I say buying, it might be puts.
And here's the thing, when we have markets like this one, yes, there are a ton of great opportunities shorting these moves. There's a ton of great opportunities playing the reversals. And there's also a lot of great opportunity buying these dips in a much longer term sense. But the key to actually profiting off of any one of those opportunities is knowing exactly what you want. You know, if you're someone who's a very long-term investor, then short-term fluctuations shouldn't really affect you too much. But if you're more of a short-term trader, then, you know, you just have to adjust accordingly, and especially make sure you are willing to adjust your bias and directional prediction in a market like this one. The direction changes so quickly, and you have to adapt with the flows or you're gonna get ran over. And as always, have stop losses. Prioritize risk management more than anything else, and that has certainly been the name of the game in the short term. So good stuff with those levels there, Tom. I will definitely keep them close on watch. And then we can't forget, besides the government shutdown news, we also have a handful of pretty exciting economic events as well.
Yeah, we definitely do. It's going to be a crazy next couple days. Tomorrow, we even have Jolt's job opening data, which is going to be pretty big at 10 a.m. Eastern time, so watch out for that. But really, I'm really waiting for Wednesday, Mike, because we're going to get the CPI and the inflation data. And what's interesting is they're actually looking for a bit of a dip on the overall inflation rate here, and even the core. They're looking for it to drop by like 0.1 to 0.2%. So I guess we'll see if inflation's falling or not. If it ends up coming in hot, then the market might get even more freaked out. And then we do have earnings this week as well, with quite a few. I would say Thursday and after hours is my favorite day with DocuSign, but of course Adobe and Oracle tonight are pretty big companies as well.
All right, sounds good. Well, with that being said, Tom, let's jump right into the good stuff, which are some setups and predictions then. A stock that is close on watch is Apple, and it is to the downside. As we look at this stock, not only has it had a brutal day today, but it has also been struggling a decent amount over the past few months. Apple is one of those big tech companies that, you know, of course they've been doing fine, but when you compare them to like other big tech stocks, especially ones like Nvidia or Tesla, over like the past few years, they've definitely been lagging. As we look at Apple right now, you know, they had a pretty rough day today as they closed down by nearly 5%. Their intraday price action was just disgusting, especially like for that first half of the day. If we see a break below that like 224 area, that would just be like another just horrible sign for Apple, and it could open up some bearish opportunities, so keep it on watch.
Yeah, I really like that support for a possible breakdown tomorrow. I'll definitely be watching it very closely, Mike. With my first setup today, I'm actually looking at crude oil, and I've been watching crude oil a lot in the short term, and it actually ran down to test a very, very key support in the short term. We can see it starting to react here. We're actually seeing some oil stocks like ZOM and Oxy starting to pop back up after recently breaking some of their supports as well. But with crude oil here, overall, Mike, this support is right around $65. If we see it break down over the next couple of days to even couple of weeks, I'm going to become a little bit more bearish on the oil stocks. At the same time, if we see a good bounce and reaction back to the upside here with crude oil, that could end up being really good for some of these oil stocks like ZOM, which is starting to recover back a little bit. So I'm really watching crude oil here. I'm kind of waiting for the direction, but I think that this support is very, very important. And there's been a lot of things in play lately, like OPEC, supply hikes, and different things like that.
Good stuff. And I saw even ExxonMobil had a pretty good day today as well. So I will keep a close eye on Exxon and oil like you mentioned. So sounds good there. But another stock that is still close on the radar is AMD, and it is more in a bullish sense. I know I've mentioned this one a handful of times in the short term, and even with all of the brutal selling we saw today, it still held that like $95 area of support. It is below that $100 resistance level now, which isn't the greatest sign ever, but given how badly the sell-off was today, I'm not that surprised. So AMD definitely is on my bullish radar. Of course, with every other setup in the market right now, of course, if the market opens up tomorrow down 3% and everything's just falling off a cliff, then, you know, trying to play a bullish setup like this one probably isn't going to be the best idea. So of course, keep in mind, while this is a bullish leaning play, and while there is good support levels, close by, of course, just use like you reference the market and use like common sense and like a sentiment standpoint.
Yeah, if we start to see a higher low form here, it will be interesting. And the market, I know it's falling down a lot in the short term. There are going to be points, especially intraday, where we start to see like little rips back to the upside. And with how bearish the market was today, like I wouldn't even be surprised to see like maybe a slight pop back up sometime tomorrow morning or something. And it's not bad to look at some of these stocks off of these crucial supports coming up. Bitcoin could not hide from the selling today, Mike. Bitcoin ended up tanking down a pretty bad way. It's down under 80,000 a coin, broke below its recent low actually, and we're seeing Bitcoin stocks follow this move down. MicroStrategy is actually getting close to a major support around 232 and then 230. We can see on the hourly chart here that this area has been pretty critical, and we've seen a lot of good bounces off of this lately. Going to the Bookmap, the X-ray vision is showing us that there's like 42,000 buyers that were stacked up there at that 230 point today. There's also some buy walls down around 220, but my point is if we break below 230, I will be watching for the breakdown there. There's a pretty good stack of buyers, and if it ends up giving out, I think that would be a crucial support to break down. So I'm just watching MicroStrategy to the downside as Bitcoin continues to turn over. I think that Bitcoin's daily chart is one of the freakiest charts right now, Mike. It's been stuck up here at the highs for a long time, and it's starting to break under some critical levels.
Yeah, now it's all the way down to like $78,000 per coin. So it seems like investors weren't too happy with Trump's strategic crypto reserve. So either way, yeah, it's definitely worth observing. And I think what it really goes to show more than anything else is just investor sentiment is definitely withering away in a pretty intense way. So I will also keep a close eye on MSTR and all other crypto-related plays, especially Coinbase and even like ETFs like IBIT. So good stuff there. But besides that, Tom, let's jump right into today's momentum plays. And with the first one, we have QUBT to the downside.
The quantum stocks are still selling off, down over 10% today. If QUBT breaks under $4.45, keep watching it down.
All right, with the next one, we have LMND, also to the downside.
Lemonade. We might need to put some sugar in this one. It's getting sour, but if it breaks under 32, then keep watching it to the downside.
All right, and then with the last one, we have ARM, also to the downside.
Yeah, tech stock could not hide from this disaster today, down 7%. If they break under 114.50, just under the low of day, then keep watching them down. I was watching that 115 support, but I really like that low of day a lot better around 114.50.
All right, sounds good. So we have these three stocks on the radar for potential continuations if and only if they break through the levels listed. The stronger and more consistent these stocks move, the better the setups become. But as always, with any setup you ever trade, you need to have stop losses. Trading without a stop loss is like trying to drive blindfolded. It's something you certainly don't want to do, especially with markets like this one when the moves are just so large in both directions. So either way, keep these stocks on the radar. And besides that, Tom, let's jump right into today's $630,000 big money trade. And we are looking at ticker symbol AER. Today, the big money bought the $87.50 strike put options that expire on August 15th of 2025. For those of you who don't know, AER is the world's largest aviation leasing company, and this stock has been beaten down pretty badly in the short term, just like most other companies. And the trader here is buying put options that are pretty far out of the money, which definitely increases the risk for this trade. But in the event AER can continue to move lower, these put options can do very well. So this is like a high risk, high reward trade. I like how they have a lot of time here. I don't love the strike price, but I'm definitely excited to see how it does.
This is pretty funny. AER has a lot of these wild drops on the daily chart here, Mike. Like it'll just like start gapping down like out of nowhere sometimes and have some pretty wild tests of this lower range around like $90 to $92. If we do see like the lower end of this range test again, I think that could end up being a pretty good opportunity for these puts in the short term. They do seem like they're pretty far out of the money, but hey, you know, this stock just opened up today around 98 and closed at 95. Like, we're only a couple days away if it keeps up at this pace, but it's definitely getting crazy in the short term. I actually had never heard of AER before the big money play was announced today, Mike, so I don't know too much on the like fundamentals or like what's behind this business, but I really do like the chart and this overall range that's kind of playing out here.
Yeah, and it's definitely moving quite a bit, which is good because, you know, when you have a stock that generally speaking is, you could say much different than your average big tech stock, but still has like big intraday movement like we saw today of nearly 5%, that definitely does bring in some good opportunity for options traders, especially for, you know, options that have time to them. So either way, keep this one close on watch going forward. But as a quick side note, if you guys are new to the channel, welcome, and consider subscribing to get our videos recommended to you more often. We post brand new videos just like this one all the time. It takes us hours to make these videos where we cover all the most important news, information, earnings events on the economic schedule, government shutdown news, and basically everything you have to know in around 20 to 25 minutes or less. So if you like the video, then welcome, and we'll see you more often if you subscribe. But we also have to give a giant shout out to today's member of the day, Lethal, in the Profits channel today, who had a great profit with ticker symbol NEE, which was awesome to see. He had some great words there as well. So huge shout out to you, Lethal. Keep up the great work going forward, and it is awesome to see posts like this one. But as we look at the market right now, Tom, we are certainly set for a very exciting, a very action-packed, and a very entertaining week. I know we have the tariffs on steel and aluminum set to go into effect on Wednesday, and I have a feeling this week is going to be a crazy one, especially with the inflation data and the government shutdown.
Yeah, Wednesday is going to be a crazy day between the tariff stuff and then, of course, now the CPI, going to be a big one there. I did have something funny that I wanted to end the video with. If you guys think that this is funny or not, let me know in the comments. But whoever was rooting for Philadelphia, I hope you're eating your words right now because, man, there was some stats that shows if a Philly team pretty much won the Super Bowl or World Series or something, stocks did pretty bad. And I don't know, we're kicking off the year on the right note as far as this data is concerned.
Oh my gosh. Yeah, I remember when we covered this data right around the time of the Super Bowl, and it's funny how some things like this just end up working out. So, yeah, that is funny. So, yeah, thank you all so much for watching. We're definitely set for a crazy and exciting week. If you guys are into short-term trading, definitely check out that first link in the description in the comments down below to get full access to the Stocked Up trading floor. This basically gives you full access to our army of trading robots, our weekly live events. You can chat with Tom and myself all day long, access the big money plays, and much, much more. We could see today's high-risk scalps had multiple 200% plus move plays today. We had some coin put options pop up by 291%, Hood put options by 279%, Tesla put options by 273%, Mara put options by 229%, and the list goes on. So definitely check that out in the first link down below. But besides that, thank you all so much for watching, and let's crush it in the market tomorrow.